Portions of the following program may be pre-recorded.
The following program is sponsored by Max Out Savings Advisors. The views expressed during the broadcast are solely for entertainment purposes and do not necessarily express the views of KNTH, its management, Max Out Savings Advisors, or its sponsors. Max Out Savings Advisors and members of the Max Out Savings team may or may not hold securities mentioned during the show. Plan for your prosperity. Prepare for your retirement. Safeguard your savings. And nurture your investments. This is the Max Out Savings Show with Ted Gioka, a presentation of Max Out Savings Advisors. Now, here's your host from Max Out Savings Advisors, Ted Gioka.
Morning. Welcome to the Max Out Savings Show. I'm Ted Gioka, and we're talking savings, investments, and your retirement here on the show. Our show is all about saving money, building up wealth, and understanding a very complex and rapidly changing world. And we bring these ideas to you. We bring what we think is going to happen. We try to get you ahead, so you're ahead of what's happening and understand the world today. Our motto and our philosophy is to save aggressively and invest conservatively. That, my friends, is the key to building up wealth over the long term. Save aggressively, invest conservatively. And so we got just a lot to talk about today. We're talking about 401ks, IRA rollovers. We're going to be talking about what's happening with the elections, what's happening in the world today, and what's happened. Very volatile stock markets here, and so what's going on there. And so let's just kind of start off and get going with it. The market last week, not this week, but last week, it fell. It declined. It was declining. Had a big drop off on Thursday and Friday of the week before, and if you look at it, it's a pretty steep drop. It's a precipitous drop, and it hit on the S&P 500, hit the 100-day moving average, came back up, and then over the weekend, the Japanese carry trade blew up, and the Japanese market fell 13%. The markets plunged. The Dow was over 1,000 points down at one time. Markets around the world were selling off. Bitcoin at one time in Ethereum were down like over 20%. General collapse. Gold actually held in there pretty well, but it's a complete panic. It was really a global almost panic. So where we are at the end of the week. And a couple things. What happened there? And we're going to be discussing that. And I guess it's all over because, quite frankly, by the end of the week, I'm being somewhat facetious. By the end of the week, the S&P, the NASDAQ, after that huge plunge on Monday, was down 0.18%. And the S&P 500, for all practical purposes, ended up even on the week. So in the week that they had the most volatile markets we've seen, I think this week had, the highest, biggest point in moves up and down in the last year to date or in the last 12 months. Incredibly volatile, and then it ends up exactly right where it was. For all practical purposes, right where it was. So I guess there was nothing to see, and people have been warning about the Japanese yen carry trade. It blew up, and hey, it was a one-day event, and it's all gone. $20 trillion got reset, and it was nothing to see here. That's just not believable. And I think the central banks, the treasuries around the world move quickly to stabilize things. The stock buyback programs came in, and companies ratchet up their stock buyback programs to take advantage of the dip. And the bigger the stock buyback program, the better the stocks seem to do. But looking at this, we just don't think this is over. As we have talked about in the most recent Max Out Savings reports on the show for months, we've been saying, look, summer time is going to be incredible volatility. We said, look, the number one thing driving the markets is going to be the elections. And sure enough, I mean, this market started plunging a week ago Thursday. it actually, what happened, that was the day before, that's when word leaked out that Kamala basically had enough votes and they were going to push her through on Friday and make her the Democratic nominee. And I think people on Wall Street and around the country like us, oh my God, you mean we could have President Kamala raising taxes, flooding the country with immigrants, removing, causing general havoc as she institutes a new communist system in the United States. And to be fair to that statement, her father was basically a communist professor at Stanford. So, and it's been utterly remarkable, the transformation of Kamala Harris from probably the most disliked vice president, the person, people were terrified that something was going to happen to Joe Biden, even Democrats, and we're going to get Kamala Harris as vice president, and all of a sudden, she's a modern-day Margaret Thatcher. Within 1 week of massive media onslaught, basically 2 weeks of huge media onslaught, to coronate her, you would think she's the second coming. It really shows you the power of the media when people are just think someone's absolutely a complete loon and an idiot, and they're terrified of her being in power, and then the big media onslaught, and all of a sudden she's Margaret Thatcher, and so we're even seeing poll numbers that Kamala Harris, the most incompetent vice president. I mean, I think if you had to run a poll in this country, I think she'd have come out number one, the most incompetent vice president in history, is suddenly magically in the lead. Now, I don't believe the polls. This show predicted Donald Trump ahead of anybody I know. We said he was going to win when he was nominated. We said we like Donald Trump. It's looking good for Donald Trump. He's going to be the guy. He went through the thing. It went through the Republican convention. We said he was nominated to be the Republican nominee. We stated that the press has 2 weeks to take out Donald Trump, or he's going to be the next president of the United States. Okay, now the press and the powers to be in this country basically, I'm not sure they had heard Ted Gioka say that, but they know this. They've got 2 weeks to try to sit there and build up Kamala Harris in the public's mind. They couldn't take out Donald Trump, and he became the next president. And so they're trying to put this massive media campaign out there. Look, it's a different world. The difference between Donald Trump and Kamala Harris is not Joe Biden versus Donald Trump, even saving that. It's not Bill Clinton versus, probably a better analogy is Bill Clinton versus H.W. Bush. It's a material, I mean, it is two polar opposites. There are two directions for the United States of America. It will never be the same again if Kamala gets in there. We're going to have open borders. We're going to have high taxes. We're going to have basically institute a socialist agenda in the United States. You're going to lose the right for freedom of speech. You have to be careful what you say. Crime is going to be out of control. Taxes are going to skyrocket. Inflation is going to skyrocket. Spending is going to skyrocket. And so it's a binary choice. It is black or white. I mean, it's 0 or 1. There's just nothing in between on this deal. And in many of the past elections, we've really sat there and, the difference between a lot of these people has been pretty minor. I mean, LBJ, Goldwater was more conservative. Nixon, Hubert Humphrey, Jimmy Carter, versus Ford. There was not a lot of difference. What you have to understand, even Biden, I mean, there wasn't much difference in Biden. He got in there, and honestly, it's pretty clear to everybody after that last debate that he's not the guy running the country. You've got a bunch of radicals in there. And so, but this is going to affect the market. And this is what we said. We said, look, this is going to affect the market. And if there's any doubt, about what Kamala's going to do, she picked the most radical guy. I mean, I can't believe she picked Walz. I mean, I was like, really? You got to be kidding me. I mean, you had all these other people. Why would you do that? He was the most liberal of the group. And that just shows you that's the agenda. They're moving forward with the agenda. They're not backing off. I mean, they're going to come in there. They're going to, maybe try to jail Donald Trump September 18th, or if he gets elected, they're going to claim he's a felon and he can't possibly done because of that basically Hanoi kangaroo show trial that Judge Merchan put up there. I mean, Judge Merchan should be under arrest for election interference. I mean, the idea that this clown is up there acting like this in judicial robes is a disgrace. His daughter's one of the biggest Democratic fundraisers out there. What do you think that is? She's getting a percentage of the money she's raised. Those are payoffs to the judge to sit there and swing the election for the president of the United States. So we have to. This is very volatile times we're in, and we have to understand that. I mean, we've gone from hey, Joe Biden's going to be running versus Donald Trump to oh my God, Joe Biden is not even there. Who's actually running the country? To what? Wait, President Trump was shot. To our computer systems. Large numbers of our computer systems crashed, and banks couldn't give out money, and hospitals couldn't operate, and some airlines had to declare ground stops on their planes. We're going to have a primary to pick the replacement for Joe Biden. Also, no way, we're sticking in Kamala Harris, and you guys don't get to say anything. The level of volatility is unlike anything we've seen in decades. You really have to go back to the 1960s to really see this type of volatility. We have wars in the Middle East. The question it's like, are we going to have is Iran and Israel going to be at war this evening? I mean, that's very possible. That could spread. It could spread and cause more problems. We have the Ukrainians have now decided they're going to try to invade Russia, and the U.S. has said they can use their weapon systems to attack Moscow. They did that a couple of days ago, and yesterday the U.S. said, hey, it's okay for Russia to use these long-range missiles to take out Moscow. Well, right now the northern border up there. They're moving in to what is the country up there? Anyway, it's north of like Joe Biden here, but with Yushchenko up there, who runs that country, is now massing troops, and the Wagner troops are massing on the northern border of Ukraine. So we might have another country coming in on top of this any day now. So again, this is extraordinary times, and things are moving so quickly that you have to be able to react, and people are struggling to react. I mean, after I said all that, this was after the biggest collapse in the Japanese stock market since 1987 happened Monday. And so the question you have to ask yourself, in that world, we had a correction. Well, that was a lot of stuff, but it's over. Nothing to see here. We got a resumption of the new bull market. The Fed's cutting rates. It's all going to be good. I mean, it's not believable. And this just highlights the importance of good money management, of risk management, and understanding the world today. Because if you notice from this kind of monologue I've talked about, if you notice, one of the things that's happening is we're getting massive changes very quickly in the world. 1 minute, Joe Biden is running for president. The next minute, it's, oh my God, who's actually running who's running the country? That's in 1 day after that debate. President Trump is nearly assassinated, is shot. That it was an inch. No, it wasn't. That's not even a fair statement. It was a half an inch away from us not having President Trump. A half an inch, and you can see a picture of the bullet. I mean, if there's any doubt, I mean, some people say, "Well, it's ricochet." It's like, no, wait. There's a picture of the bullet. I've never seen a picture of a bullet in the paper in my life of a shooting attempt of the bullet, and there it was. But so one day to the next, your world rapidly changes. In that rapidly changing world, 1 minute, we're going to declare a primary, and we're going to try to pick out Gavin Newsom, Gretchen Whitmer, Tim Scott, not Tim Scott, but Kamala Harris. The next minute, we've coronated Kamala Harris, and so we actually don't need primaries. We actually don't need votes for any of this stuff. This is just who we're going to put up. It's kind of like a coronation. But these are very rapid changes happening very quickly. The head of Hamas's political wing was assassinated in Iran. That went to, hey, there could be a possible war within 2 days when Iran. In this type of tremendous volatility, tremendous change, you have to have the ability to manage risk and understand it. And you have to understand that things can change very quickly, and you need the optionality in order to do it. And so we're going to discuss this and kind of discuss what some of the other things are going after this quick break right here on the Max Out Savings Show.
The Max Out Savings Show with Ted Gioka is taking your calls now at 713-339-1070. Ted Gioka will return after these messages.
I'm Sam Malone, president of 512 New Media. We're Houston's leading marketing and content creation firm for many reasons. Our assets are exceptional, from video production to web design, strategy, and the ability to say no. Saying no is integral in launching a successful, profitable campaign. For example, take a look at Memorial Day. It's a federal holiday set aside to honor and mourn those in our U.S. military who died while serving our country. I'll say it again, for those who died while serving our country. So how does having a sale work in unison with the reason for the day off? Look, we know people will be at the beach and barbecuing and having parties. We would probably say no to launching a Memorial Day sale. So is there another way to commemorate the day while marketing your brand? Absolutely. And from our experience, the same holds true with Easter Day sales and MLK Day sales and Christmas Day sales. That's why we're different. No cookie cutter, follow the crowd, template marketing. Let's talk. We're 512 New Media. 512 New Media. With better marketing comes better value, creating better results.
Hey everybody, Charlie Kirk here. Ted Gioka, the founder of Max Out Savings Advisors, always says, save aggressively and invest conservatively. He specializes in helping people grow their retirement account with as little risks as possible. Ted combines working knowledge with the intuition gained from over 25 years of experience of value investing in the stock and bond markets for retirement accounts. Like you, Ted is deeply conservative in life and in his investment approach. His risk strategy allows him to anticipate market downswings to protect your money. Ted is also the conservative host of the Max Out Savings Show. You can listen to him every Saturday morning at 10 a.m. right here on The Answer. If the idea of saving aggressively and investing conservatively appeals to you, the best way to get to know Ted is to call him. The number is 713-672-0400 or visit maxoutsavings.com. That is maxoutsavings.com. Call Ted right now at maxoutsavings.com.
Once again, here's your host for the Max Out Savings Show, Ted Gioka.
Welcome back to the Max Out Savings Show. We're talking savings, investments in your retirement, as always, here on the show. We're also on Sundays at 7 a.m. as well, so you can catch us there. There's been a lot of demand for the show, and you can listen to the podcast on AM 1070 The Answer's website. So there's a lot of ways to participate. You can also get the free newsletter by just going to the maxoutsavings.com website. You can just say, please go to the website, sign in for the newsletter. It's completely free. We're not going to bother. We're going to call you up. If you need some help with your retirement, you can also request an appointment on there as well. We're here in Houston, Texas, and we'll be happy to help you out. So anyway, if you need some help, go to our website, maxoutsavings.com. So where do we go from here? I think we continue to look at this just gigantic levels of volatility in here, and to understand that things are very much changing, and they're changing rapidly. And I think this is going to continue overall into the election until we get some type of really clear idea where things are going from here. And I think, and so this is going to be this tremendous volatility that we're going to see across the board. And so it's going to continue. And I think it's going to be a very volatile market. By the way, it's Belarus is what I was. Some of the Belarusian military has shot down some things along the border with Ukraine, and there's troop movement there. The question is if Ukraine's going to continue to play this game rather than trying to sit there and get peace talks, because the problem is nobody wants peace talks, and the danger is, does Biden want a war to try to muddy the election or put them ahead? But if Belarus comes in, they can be in Kiev very quickly and change the nature of this whole war. And so this is just another level of uncertainty we're seeing out there. And so I think you have to understand that. I think we have to take a look. We have to take a look at how the market functioned when the yen carry trade crisis happened over the weekend last weekend. And if you look at it, everything sold off across the board. Gold actually held up the best, and I think that's important because what we want to do is find alternatives that are going to perform reasonably well. And if you look at it, as we talked about on the show last week, we were watching the markets, and everything was down Monday. It was Friday. People could see that there was issues coming with this carry trade, and also with Kamala being elected, nominated, and basically been approved to be the nominee, was approved as the nominee for the Democratic Party. Everything started plunging, and what we said at the time was, we looked at our accounts, and the market was down 500 or 600 points. Things were plunging globally, and we had a number of the precious metal stocks in metals in the portfolios, and we were barely down at all. But later in the day, there was a bigger sell-off, and they started going down as they started hitting everything. The gold has come back up the best of anything out there. It continues to hold up. The crypto proved to be in a time of crisis not where you want to be. I mean, a 20% drop, it actually performed the worst of everything. So this is very bullish for gold. I think this continues because the issues these countries all have is they have to continue to print money. That's all they can do. The minute we go into recession, they're going to have to print more money. So I've gotten some questions about what is the Japanese carry trade and what happened this last weekend, and I'm going to try to cover this now. The Japanese yen, the interest rate in Japan was about 0.1%. Now, our short-term rates are about 5.3% here, and it was over 4% on the 10-year treasuries at the time. But you can get 0.1% over there. In addition, the Japanese yen has been selling off now for quite a while, and it keeps going down. And it went from like 140 down to 165 yen to the dollar. Well, if I'm borrowing, if I borrow $1 million in Japan, it's costing me $10,000 a year in interest. I buy $1 million worth of yen and I convert it to dollars. And so after a year, I have a $10,000 bill, but if the yen falls 10%, I only have to pay back $900,000. So almost anything I invested in, it doesn't even need to move. I'm up about 10%, a little less after the thing. There's trillions of dollars of sophisticated investors around the world borrowing this money, and Japanese investors are doing the same thing. Well, what happened is the Japanese central bank, inflation's running over 2% or 3% right now in Japan, and they got 0.1, so you've got a huge, probably 2.5% to 3% real negative interest rates over there. So that people are going to look, we've got to start raising rates. So they raised rates 0.15% to 0.25% total. Remember, we're about 5.25%. They're at 0.25%. And all of a sudden, the yen went from about 164, 165 down to about 140. And so what that did is that all of a sudden, all these people that were making all this money, they all of a sudden had an issue of what do they do now? They're suddenly losing money, and they all started liquidating out their positions, and so that's what the situation went from 162 down to 142, and this is a big. So these people had big losses, and they started getting blown out of their positions if they used margin. They started liquidating the positions. So you saw a huge amount of selling. The question is it over? I've seen numbers as high as $20 trillion worth of borrowing over there on some of this stuff, on this carry trade. I don't think it's over. Okay. And so I think this is going to continue. I think if you look at the Nikkei, it's come back some, but again, a massive decline in the Nikkei averages, in the worst since the worst since 1987, and we don't think it's over yet. We think it's recovered to some extent, but it was basically the Japanese stock market crashed, and so these things tend to reverberate around the world. The recovery in the United States has been on low volume, and the S&P 500 came back above the 100-day moving average, which is kind of something. But even the Nasdaq still couldn't. It really. The world is too unstable, so we don't think this correction is over with yet. Tell you what, let's take a call. Welcome to the Max Out Savings Show.
Good morning, Ted.
Morning.
Yeah, I had a question. I think last week you covered something about distributions, RMDs. I just had a question, and a second question, if time permitting. With respect to required minimum distributions, do you recommend taking, a lump sum at the beginning of the year, or spreading it out like quarterly or monthly or whatever? What are your thoughts on that?
That's a great question. I tell you what, typically we take most of ours at the end of the year. Now, if you're running a high beta portfolio, which simply is, it's all stocks and all tech stocks, and it's very volatile, I would take it at the beginning of the year because what could happen is if you get a 25% drop in the market, and all of a sudden you've got to pull out. If you're up in age a little bit, it's maybe 5%. In your 80s, it's maybe 5% of your portfolio on a big stock drop. That's very detrimental. So my answer is either take it out on a monthly basis if you need it. We usually wait till the end of the year to get the tax-free. If you have a high volatile, high beta portfolio, take it out at the beginning of the year because you don't ever want to have to take it out when the stock market's falling 30-40%. Okay,
well, if these are typical funds that are in a company like a 401k or something, I mean, it's hard to predict that stuff. So, but my thoughts were that maybe quarterly, but then again, I don't know. I know at the end of the year, typically the market tends to run up, and I think I could be wrong in this, but it almost seems like the government wants the market to end on a high note so that they can get more revenue at the end of the year. But I mean, that's not always the case. But
you get these crashes every once in a while, and that's the thing, people in trouble.
Okay. The other question, so basically you're saying if basically try to take it at the end of the year if you can. Is that what you're saying?
Yeah, typically, yeah. Mm-hmm.
Okay. And then the second question I have is I was watching television last night, and they had a report, and it was coming out of Prairie View that some Chinese company, YSO or something, was breaking ground on a plant in Prairie View, and I guess that's allowed here in Texas. I didn't know. I thought there was some talk about, not allowing that sort of thing from depending on the country involved. But I guess they can come over here and purchase land and set up shop here in Texas. I mean, I'm just curious.
The controversy has more been about farmland. We don't want owners. Foreigners buying farmland, and that's globally, really. People, most countries, they need it for the food, and you don't want foreigners interfering with your farmland. But if it's a factory, and I haven't seen exactly, but if it's a factory, look, hey, that'd be great if the Chinese would put all their factories in the U.S. It's more jobs here. The problem has been they've been putting they've been putting the factories in China and taking the jobs from us. That might be a research facility there too of some type, which I'm sure they might allow that.
Well, what they said was it was going to be a membrane facility for construction. I don't know if that's, when they're doing foundations, I don't know exactly what it was.
That's probably some type of materials. They lay those membranes out under the foundation or under your roof or those type of things. So if people want to bring factories to us and give us jobs, Charles, fine with me.
Yeah. Well, I know there's been talking about, maybe changing certain things here in Texas, but, it's been talk. I don't know if anything ever was done. So, okay. Well, that's all I had. I appreciate it.
Okay. All right. Thanks, Charles.
Thank you.
No, that's a good question. But, because we need the factories. If you look at China, actually, Charles, thanks for the call. That's a good segue into one of the things we're seeing is we're seeing a slowdown in the U.S. consumer. And why this is important is the U.S. consumer is about 65 to 70%. I've got different numbers on this of the U.S. economy. If you look at China, it's 38%. And China's basically done a lot of infrastructure investment, factories and all that stuff, and they've had an 8.8% growth rate. Think about that, 8.8% growth rate since 1990 because of that. And so by putting these factories back, that helps your growth. And now we're putting lots of semiconductor factories in right now, big, very expensive plants, defense plants, because our munitions have been weak, are materially depleted from particularly the Russia-Ukraine war, and now we're having to scramble to find munitions to help protect Israel in their time of need, because we haven't, we've been careless with our use of munitions with the Ukraine, but so we're building these plants. So these munitions plants, these technology plants, these AI server farms, the chip plants, those have the ability to stabilize our economy and grow it a little longer term. And likely, if we go to recession, the recession is not going to be as deep because we have some of this backing. The one problem we run into is if something happens in the financial system, then all bets are off. But what we can see in listening to these conference calls with corporate executives, it's everybody. It's McDonald's, it's Burger King, it's Macy's, it's Louis Vuitton, it's Richemont, I think they mean Gucci. Everybody is saying the consumer is slowing down. They're making, if they can find a cheaper alternative, they are. They're really being hurt by this inflation. And the consumer confidence has gone down from about 79 in March down to 66. So it looks like this economy is slowing. This is why there's talk of the Fed cutting rates. Now, the talk is that, hey, this is good because markets go up once the Fed starts cutting rates. Well, that's not always the case, and what's unusual about this time is this stock market has gone up so much in anticipation of cutting rates. And so this market over the last 2 years has moved materially higher, and particularly over the last 3 months has accelerated because everyone's all excited about the potential rate cuts coming in. But that's unusual. Typically, it's the other way around. So this is something we want to continue to watch. But it looks to us like this economy is slowing or going into a slowdown, likely recession. Typically, when you see the yield curve invert, that which means the 2-year yield is higher than the 10-year, that precedes a recession because the Fed is raising rates because the economy is getting too hot. This has been the longest time in history. It's been over 500 days, which is the longest in history for an inverted yield curve. And one of the reasons is because in the past, the inverted yield curve has pushed the short-term rates into the 7s. 5% really doesn't affect things that much. So it's a little different. It's a much more different world. But the reason I'm saying is we think the economy is slowing. Remember, all the election spending is going to start dropping off starting in probably October, because pretty much the election's done. But so then you're going to get a big drop in election spending. You're going to get a big drop in infrastructure spending, everything else, because the Biden administration tried to just jam a huge amount of spending into this year to keep the economy going so they would be reelected. And so we do think the economy is slowing, and it's probably not good for the market. So what? Let's take a quick break and be right back right here on the Max Out Savings Show.
If you've got savings and investment questions, Ted Gioka has answers. Call the Max Out Savings Show now at 713-339-1070. We'll be right back.
Hi, this is Ted Gioka of the Max Out Savings Show. Our motto and philosophy is to save aggressively and invest conservatively. The world is changing at a faster rate than any time in the last 50 years. The investment world has changed. Have you changed? Inflation will destroy your retirement. It is a different world that requires different strategies and ideas. The era of indexing and investing is over. If you need help, listen to the Max Out Savings Show. Our show airs every Saturday at 10 a.m. and Sunday at 7 a.m. We talk about investments, the world, and where the world is going today, and help you understand it and help you save money and build up wealth. It's the Max Out Savings Show. And if you need some help, go to our website, maxoutsavings.com. That's maxoutsavings.com. On the website, you can sign up for the free Max Out Savings Report. Our report covers all types of these big issues, the changes in the world, and helps you understand and protect your retirement. So go to the website, maxoutsavings.com.
Hey everybody, Charlie Kirk here. Ted Gioka, the founder of Max Out Savings Advisors, always says, save aggressively and invest conservatively. He specializes in helping people grow their retirement account with as little risks as possible. Ted combines working knowledge with the intuition gained from over 25 years of experience of value investing in the stock and bond markets for retirement accounts. Like you, Ted is deeply conservative in life and in his investment approach. His risk strategy allows him to anticipate market downswings to protect your money. Ted is also the conservative host of the Max Out Savings Show. You can listen to him every Saturday morning at 10 a.m. right here on The Answer. If the idea of saving aggressively and investing conservatively appeals to you, the best way to get to know Ted is to call him. The number is 713-672-0400 or visit maxoutsavings.com. That is maxoutsavings.com. Call Ted right now at maxoutsavings.com.
We return now to the Max Out Savings Show. Here's Ted Gioka.
Welcome back to the Max Out Savings Show. We're talking savings, investments in your retirement. One of the things that I came across is I came across some things in the journal here about 401ks and rollovers into IRAs, and they made the statement that you have better fiduciary duty backing in a 401k. That's incorrect. Advisors. If your financial advisor is a financial advisor, not a broker, but a financial advisor, he has a fiduciary duty to you, and so he has to do what's right for you. That at Max Out Savings Advisors, we're fiduciaries, so we have to do what's right. And what they're talking about is the Department of Labor rules very muddied on about the recommendations to take money out of an IRA, out of a 401k, and there's some question there as where that comes in. Look, it's been our experience. Very rarely are we counseling people to take money out of their. They typically come to us because they want better management. They want more risk-based management than their 401ks offer. I mean, most 401k plans just have a bunch of stock ideas, and they tend to be overly aggressive. And so but there's actually some studies, and 66% of the people rolled their money over because they didn't want to leave the money with the company. 61% was consolidate. 59% said they wanted more options. 57% wanted to preserve their tax options. which is kind of an interesting one there. I think because if you take it out and just into cash, then you don't get that. And so some people go, well, I want my money out of the plan. Give me a check. And they go, wait, you're going to have to pay income tax on this. And they go, what do you do? Well, then you roll it over. Because if you roll it over into an IRA, it rolls over tax-free and you continue tax-free growth. 44% because they were required. Only 30% said that they were told by their advisors. Our experience, I mean, the people that come to us, I think, are reasonably sophisticated people, and they're big savers. But rarely do they come to us and ask us to make a choice. What should I do, 401k or IRA? Typically, they just say, we want you to manage it, and we do. Look, there's a lot of times a number of times people come to us and I'm thinking of retiring. I've got $1 million in my plan. I want to get it over to you. And the question starts asking, I'm like, what do you do? What are you going to do in retire? Well, I don't know. Do you like working? Oh yeah, I like working. And the answer a lot of times is, well, look, we suggest you keep working, retire when you're ready to or you need to. There's nothing that says you have to do it now. So it seems like oftentimes, we don't tend to counsel to leave it there. We tend to counsel people to stay there at the company, and then the answer is just keep your existing plan there, because a lot of times they can't move it out. But the more important thing is, do you want to stay in the job? Do you want to retire or not? Are you comfortable? And do you have something else you'd like to do with the retirement? So this is something that we want to sit there and watch closely. But it really comes down to retirement, and nothing's requiring you to retire. If you like working, continue to work. I mean, we find our clients that are retired that have something to do, even if it's volunteering at the church. A lot of them love doing that. There's been a lot of find something to do, because your life is going to be more fulfilled. You're going to live longer. And the other big thing we talk about on the show is exercise. I'm a huge believer in exercise, although I've been so busy lately. It's like, Dad, you need to exercise. But exercise makes a huge difference. I was talking to a friend of mine, doctor friend, and he's telling me all these in his house. He goes, I'm building a gym. I said, oh, wow, that's nice. He goes, oh, yeah, it's going to be huge. He said, once you hit age 60, he said, if you don't exercise, your body goes downhill real quickly. So it's so important to exercise. But a couple things happen if you exercise. You're getting the blood flow, even if you're just walking around the block, walk a mile at night or something. In this heat, it's got to be at night or early in the morning. But you're getting the blood flow. It's helping your body treat disease, help fight off issues, inflammation, all of that. And the other thing is, since you're healthier, you're able to do more and enjoy life more. And the other thing, it's cheaper because you don't have to pay medical expenses. So it's all a big. It all flows through. The other big thing is to eat right, eat well, concentrate and eat well. Look, I try to keep a diet of low sugar, other things. There's nothing wrong with having some sugar, a small amount. If it's something that is kind of, is probably not good for you, you have just limit your portion on that portion. So if you have a healthy salad with chicken or something, have a big meal there, have a small dessert. The problem is when you get a giant dessert and have all this sugar everywhere else. It's the same thing with the oils. I mean, it's real simple. Try to get olive oil. I was talking to a friend of mine, trying to get him to set up to bottle his olive oil as salad dressing, because you can't find 100% olive oil salad dressing. His soybean or something. Olive oil is the best thing for you. It's got all types of antioxidants and everything in it, but it's hard. But so if you do little things like that, you're going to live longer, but you're going to be happier because you're going to be healthier. So take care of yourself. If you want to work, continue to work. If you retired, find something to do. People always need help out there, and volunteer and bring more fulfillment to your life. Now, a couple other things. There's a lot of talk about the Psalm rule that came out, and the Psalm rule is simply saying the three, and bear with me just a second, a little complicated. If the 3-month moving average of the national unemployment rate goes up 0.5%, what this means is that typically we go into recession almost every single time, and it's just gone to 0.537%. Now, it's a pretty good rule that works, and because unemployment's going up now. But it's just another example of yield curve, Somm rule, declining consumer confidence levels, corporations are putting the consumers in trouble, consumers stretched. All of that stuff is indicating an economic slowdown. And so I think that's going to be kind of important. I came across an interesting statistic that 6 million more people are working since the pandemic under Joe Biden. 6 million more. Now that sounds real good until you realize we've got at least 20 million illegal aliens have come into the country, so there's actually less Americans working, and most of these jobs have been come up by illegal aliens coming in here, and less Americans are working. And so, again, it just shows you the level of that we're dealing with in general of issues that people are struggling with out there across the board, and I think it's going to continue going forward. And so we want to watch this stuff and understand it. So in this market, keep in mind we still have that volatility. We talked a lot about the 2-year bond on the show for a year now. The 2-year bond, it was yielding close to 5%, and the 2-year bond is now it's now trading at right around 4%. The 10 years at 3.94. It actually, the yield curve uninverted this week when the Japanese carry trade blew up and there was that crash in the Japanese market on Monday. And so you can still lock in 4% on your money. The interesting thing is the rates went down to about 4.7. They've gone back 3.7. They've gone back up to 4%, which I don't think, as this economy, I don't think we're going to get a huge drop in longer-term interest rates, because I still think the inflation's out there. We're still borrowing money at the rate of $1 trillion every 100 days. Maybe it's every 120 days now. But this is additional borrowing. We now have over $35 trillion worth of debt out there. And so how are we going to service the debt? Now, keep in mind, one of the things with the Japanese carry trade is the Japanese were borrowing money in Japan at maybe 0.5% or something. They were trotting over here buying 10-year treasuries at 4.5%, and then as the yen it kept plunging down. Their investment made money on the currency, and they were picking up 4% over the 0.5% or whatever they were borrowing at. So they were making money there. Well, now that the yen is started to strengthen, they're selling bonds. The Russians have sold all their bonds. The Chinese are selling their U.S. Treasury bonds. The Saudis are selling some of theirs. Now the Japanese. Who is going to buy all these trillions of dollars worth of treasuries out there? And that's what you got to ask yourself. And this is why we think the inflation is going to continue. And there's still risk to the currency. Later this year or sometime next year, there's going to be an economic crisis when people realize the spending is out of control. We start going into a slowdown, and they want to start spending trillions of dollars more, and people are going to go, oh, my God, this is never going to end. And people are starting to lose confidence in the dollar. It's the world's reserve currency. But do you want your money, your assets in the reserve currency where the president is running again? He does a debate, and you realize the president is completely incompetent. The next week, the president decides not to run. The next week, the leading candidate, the most likely next president, Donald Trump, is shot and nearly assassinated. And then the computer systems are failing in the country as well because CrowdStrike put in a bug that shut down major parts of industry for a day. Do you want to be in that type of world? And so that's what you have to kind of ask yourself. And that's what people around the rest of the world are asking themselves. So understand that that we're still dealing with these issues. This is why the precious metals, this is why commodities, even though some of the commodities are down, are a good place. This is why stable demand stocks are a good place to be. This is why cash is a good place to be. If you're sitting in cash in Japan and the stock market just went down 13% in one day, that's a pretty good place to be, and then you can go buy something. But if you're 100% invested in the S&P 500 equivalent in Japan, and the market goes down 13%, and you're in it, you want to buy something else, you're still down 13% in one day. As we talked about on the show, one of the real things we're seeing in the world today is these dramatic shifts. One day, Joe Biden he's as sharp as a tack. The guy's, it's amazing for his age what's doing. 24 hours later, it's, oh my God, this guy, who is running the United States? One minute Donald Trump is taking the stage up in Pennsylvania. The next minute he's surrounded by Secret Service agents as being shot in the air. All of these things. One day the computer Delta's flying around all over the place. The next minute they're in a ground stop and they're and it's complete chaos because there's a computer problem. These are very volatile times. And so understand, in that world, you want to reduce your risk. You want to have some cash available at the house, some precious metal, because you're not sure. There's different outcomes that could potentially happen. And what you understand is when these things happen, they're liable to happen very quickly. In Japan, it was 2 days. Bam, they were down 20%. 2 days. So you're not going to have time to sit there and get out and do plan. You have to do your homework. You have to put your risk management plans in place ahead of time. And that's one thing we're seeing. A couple things. If you need some help, go to our website, maxoutsavings.com. It's maxoutsavings.com. You can request, go to the website, sign up for the free newsletter. If you sign up, you're going to get the newsletter when it comes out. We don't call you. We don't bother you up. It's a private list. Okay, if you'd like to talk to us, you can request an appointment on there. We're here in Houston, Texas. We have Charles Schwab to hold our assets, and we manage it for you. Just go to the website, maxoutsavings.com, and I'll show you how we manage assets using our value investing approach. Until then, remember our motto and philosophy, which is to save aggressively, invest conservatively. That, my friends, is the key to building up wealth over the long term. We'll see you next week right here on the Max Out Savings Show.
This has been the Max Out Savings Show with Ted Gioka, a presentation of Max Out Savings Advisors. Join us next Saturday at 10 a.m. for the Max Out Savings Show with Ted Gioka on AM 1070. The Answer.
This is Ted Gioka, host of the Max Out Savings Show, one of Houston's most popular financial radio shows, celebrating over a decade on the air in Houston, Texas. With stocks at record high valuations and interest rates near record lows, you need to have your guard up. You need to have a plan to manage risk to your retirement. Do you? At Max Out Savings Advisors, we have a risk-based value investing approach to your retirement. If you would like some help managing your retirement, go to maxoutsavings.com to set up an appointment. That's maxoutsavings.com.